Hello, friends. This is not something that is on its way. It is already underway. Right now, the Department for Work and Pensions is actively carrying out an unprecedented wave of targeted financial reviews. You are currently receiving a state pension alongside top-up benefits, or if you look after an elderly relative who does, you need to listen very carefully to what is happening right now. The letters are already landing on doormats across the United Kingdom. They are not standard, routine updates. They are formal, mandatory notices demanding total transparency regarding your personal bank accounts, genuinely causing widespread anxiety for thousands of older people who have done absolutely nothing wrong in their lives. People are opening their mail to find that their integrity is being questioned by an automated system. So today, I am going to walk you through exactly what these new DWP account reviews mean for you. I am going to show you why these letters are being sent out right now. And most importantly, I am going to tell you exactly how to protect your income if your name is selected. We are going to cover the 5 critical changes to how your money is being monitored this year. We will look at the exact thresholds that trigger an immediate investigation. And please, make sure you stay until the very end. Because the 5th point is the one almost nobody talks about, is causing the highest number of unfair benefit suspensions across the country. We are talking about changes that could put your state pension top-ups at risk. Changes that could cost you over £2,500 a year if you make a single administrative oversight. In some extreme cases involving historical overpayments, pensioners are facing demands to pay back over £12,500 in a single devastating lump sum. This is real, it is happening today, and you cannot afford to ignore it. Whilst to it, I want to ask you to subscribe to the channel and turn on the notification bell. I know everyone on YouTube says that, so let me explain why it genuinely matters here. British benefits system is changing at a faster pace than we have ever seen before. The rules around how your data is tracked are being updated constantly. And when these shifts happen, the DWP does not call you up to give you a friendly warning. Hot hums I tick. They change their internal policies, they update their algorithms, and they expect you to fully understand the law automatically. The people who are subscribed to this channel find out about these systemic changes before they become a problem. The people who are not tend to find out afterwards. Find out after the official letter arrives. After the automatic deductions have already started hitting their monthly income. Or after the strict deadline to challenge a decision has already passed. That is the difference between keeping your financial independence or losing it. Subscribe, turn on those notifications, and let us get straight into the details. The first major point you must understand is the introduction of advanced third-party data gathering. DWP has quietly shifted from a reactive system to an incredibly aggressive proactive system. In the past, investigators would only look at your financial records if someone reported you for suspected fraud. Problem is, the rules have now completely shifted toward automated digital surveillance. Under the updated frameworks, DWP is working directly with the UK's largest high street banking institutions. We are talking about Barclays, HSBC, Lloyds, NatWest, Santander. These banks are now legally required to run automated scans on their own internal databases to identify benefit claimants who might be breaching the strict criteria. Here is what most people do not know about how this system actually operates. Not a human being sitting at a desk looking at your bank statements because they suspect you of wrongdoing. Is a mass digital algorithm designed to flag any account that crosses certain pre-programmed financial markers. The algorithm spots an anomaly. Your file is instantly flagged, and a formal review letter is automatically generated and sent to your home. DWP is not looking at what you buy at the supermarket. They are looking for 2 very specific things: excess capital accumulations and signs of prolonged foreign travel. If you receive one of these review notices, you will typically be given a very short window to provide up to 12 months comprehensive bank statements. To find out exactly how your specific bank interacts with government data requests, you can go to Gov.uk and search for the third-party data sharing guidelines. This brings us directly to the second critical point: the dangerous illusion of the capital limits. There is a massive amount of misinformation spreading online regarding how much money a pensioner is actually allowed to hold in reserve. Many people falsely believe that they are entirely safe as long as their total savings stay below the absolute maximum threshold of £16,000. Is not £16,000 for everyone. It is a completely different, much lower figure that triggers the initial DWP intervention for pensioners receiving pension credit. The true figure you need to worry about is £10,000. If you are claiming pension credit, any savings or capital you hold below £10 is completely ignored and will not affect your weekly benefit payments. However, the moment your total combined savings go even £1 over that £10,000 limit, a strict rule known as tariff income applies. Every £500 or part of £500 that you hold above the £10,000 threshold, DWP legally treats you as if you are earning an extra £1 per week in income. Problem is, the system automatically assumes you are generating this income from your savings, regardless of whether your bank account actually pays you any interest at all. If you have £11, thousands put away for a rainy day or an emergency, the DWP calculates that you have 2 blocks of £500 above the limit. They will immediately deduct £2 every single week from your pension credit award. If your savings creep higher, those deductions multiply rapidly. Many pensioners save money diligently for their own future funeral costs, completely unaware that they are slowly crossing the line into penalty territory. Every week you wait to clarify your true financial status with the department is money that cannot be recovered once a formal deduction order is put in place. If you need to declare a change in your total savings capital, you should immediately ring the pension service on 0800-731-046. 9. The third point is the strict foreign travel trap, and this is catching out hundreds of completely innocent people. Living on a fixed income in the UK is incredibly difficult, and many pensioners choose to spend extended periods staying with family members overseas to save on domestic living bills during the winter months. The problem is the DWP imposes incredibly strict limits on exactly how long you can be outside the country while continuing to receive means-tested top-up benefits. Pension credit recipients, you are generally only allowed to go abroad for a maximum temporary period of up to 4 consecutive weeks. Is not a loose guideline. It is a hard, legally binding deadline. If you cross that 4-week limit without an exceptionally rare and legally valid medical reason, your entitlement to pension credit drops to 0 immediately. Automated bank scanning systems are now looking for foreign transaction patterns. Your UK bank card is used to withdraw cash or buy groceries in Spain, Cyprus, or anywhere else outside the country for more than 28 days in a row. The system flags it. Algorithm infers that you have left the country without notifying the authorities. When that flag drops, your benefit payments are frozen instantly and a severe overpayment review is launched against you. You are planning to travel to see family abroad for any period approaching a few weeks. You must protect yourself by notifying the DWP before you board the plane. You can do this cleanly by logging into your online account portal or by calling the official helpline to log your exact travel dates. The fourth critical update involves the hidden trap of joint accounts and family support. Many older individuals share a bank account with an adult child or a relative to make it easier for bills to be managed and paid on time. Alternatively, family members sometimes deposit money into a pensioner's account temporarily to hold for a family event, a grandchild's education, or a shared purchase. Here is what most people do not know about how the DWP views these transactions. The law does not care whose money it actually is in spirit. The law only cares whose name is legally written on the bank account statement. Algorithm scans your account and sees a sudden balance spike of £5, always earned because your son transferred money into your account to hold for his house deposit. The DWP legally views that entire sum as your personal capital asset. They will immediately conclude that you have exceeded the £10,000 threshold without declaring it. It is not treated as a favor for your family. It is treated as an undeclared financial resource that directly impacts your eligibility for state support. Trying to explain to an auditor months later that the money belonged to someone else is an incredibly difficult, stressful legal uphill battle. The problem is, the burden of proof rests entirely on you, not on the government. You will have to provide a meticulous paper trail of where the money originated, why it was transferred, and exactly where it went. Never allow anyone else to use your personal bank account to store funds if you are currently relying on means-tested welfare state benefits. Brings us to the fifth and final point, the one that is causing the absolute highest number of unfair benefit suspensions right now, is the issue of official administrative errors and the immediate application of civil financial penalties. When the DWP initiates an account review, they will send you an official document checklist. Will demand proof of your identity, proof of all your active bank accounts, and detailed statements covering a specific time frame. Problem is, many pensioners find these letters confusing, or they simply fail to see them because they are dealing with illness or are temporarily staying away from home. If you fail to reply to a DWP review letter within the strict time frame provided, usually just one calendar month, the system does not send a gentle reminder. The automated system assumes you are failing to cooperate with a lawful investigation. They will immediately suspend your entire benefit claim, leaving you without your essential income top-up overnight. Furthermore, if they find that you failed to report an increase in your savings, even if it was a completely honest mistake, can hit you with an immediate £50 civil penalty. If they determine that you acted negligently, they will calculate every single penny you were paid above your true entitlement and demand it back with immediate effect. They will deduct it directly from your basic state pension before it even reaches your bank account. You receive a review notice and you do not understand what they are asking for. Do not wait. Do not leave the letter sitting on your kitchen table hoping it will go away. Seek immediate free, independent advice from organizations like Citizens Advice or Age UK. You can contact the Age UK advice line directly on 800 678 1602 to get a trained advisor to look over your paperwork. Let us quickly summarize everything we have looked at today. First, the DWP is now using advanced automated scanning across major high street banks to track your accounts proactively. Second, for pension credit, the true danger zone for savings starts at £10,000, not the widely cited £16,000 limit. Third, staying outside the United Kingdom for more than 4 weeks without prior notification will trigger an immediate suspension of your top-up. Fourth, any money sitting in your name, even if it is a joint account or family money, is viewed legally as your personal asset. And fifth, ignoring a review letter for more than a month will result in an automated total freeze of your benefits and a potential financial penalty. None of these updates come looking for your permission. The DWP is not going to ring you up to gently explain these new parameters. Banking institutions are not going to write you a friendly letter to warn you that your account is about to be flagged. Only thing standing between you and an unexpected, devastating loss of income is knowing that these rules exist and taking immediate, proactive steps to keep your records entirely accurate. If this video has been useful to you, please hit the subscribe button and share it with someone you care about who relies on the state pension system. Share it with a parent, a neighbor, or an older friend who might not have access to information online. One single conversation could be the exact thing that saves them from a massive amount of unnecessary stress and financial hardship this year. Thank you for watching. I will see you in the next one.